Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. Now, just as folks are coming in, if someone could just pop a comment in the question panel. I know that you can hear me okay. I hope you're doing all right. Hi, Sammy. Good to see you. Van, great to have you back. Hamed, Hashik, Yusuf, great to have you guys on board. Oh, thanks, Sammy. I'm glad you can hear me okay. Well, I'm looking forward to this workshop. We've finally started to see a little bit of movement in the market. So after a very quiet day yesterday with the US markets being on holiday, we've returned to some movement, and there's plenty of activity due for the rest of the week. So I'm looking forward to going through things. Just before we get going, and as other folks are coming into the webinar, just to make sure that as we're looking at different levels, entries, profit targets, this webinar is not designed to be trading advice. So the whole purpose of this webinar is for you to look over my shoulder to see the way I understand the market, the way other professional traders understand the market, so you can see what influences there are on various commodities, currencies, etc. So that's just to make that clear that it's not trading signal advice. For those of you who regularly attend, I know you understand that now. Outline of session ahead, what we'll be doing is we'll be going through the handout, and the handout is in the GoToWebinar control panel that you have underneath the handout section. Just click the little grey triangle beside the handout phrase, and you'll see a workshop guide for January the 21st. Double click on that, and when you double click on that, this handout should pop up. And I've said it to you before, but for those who are just joining, the idea of this handout is it's simple. So one side of A4, print out, put beside your desk, and you can use it to understand the markets as you come to your desk each morning. You look back, look forward, look at the charts, look at your risk, and look at the outcome of your trade. That's the kind of 5 pillars, as it were, of trading that I stick to and I engage with on a day-to-day basis. The special topic we'll be looking at is what might cause the Australian ASX200 to pull back under 7,000 in the short to medium term. This is just an equity issue, one of the Australian indexes, the main one, the ASX200. And I just want to look at some factors that have been influencing that bull market and looking at potential for that to move back under 7,000 in the short to medium term. That's an index that I've got a careful eye on. So I want to cover that with you guys as well during this session. So that's the special topic. We'll deal with that today. Handout for session, you have that, so that's all clear. If you have any suggestions for topics you would like in the future covered, please do email me there. And don't forget that we will be looking at some trade setups that you have towards the end of the webinar. So if there's any trade ideas you have or anything you want to look at, store it up, put it in the question panel or chat panel, and we'll look at it when we get to the end of the webinar, and we can look at some of your trade ideas. Just to go over again what's happening with the pound. The pound at the moment has 3 things going against it at the moment. We've got a number of Bank of England speakers who have come up negative for a bearish outlook for the pound. We have Mark Carney speaking today at 3 o'clock GMT. So looking forward ahead, just watch out for risk with Mark Carney. Just to be aware of that. And the big issue here with the pound, it's all to do with what relationship would the UK have with the EU after Brexit? So the 31st of January is Brexit Day. That is the day when Britain formally leaves the EU. They then have 1 year to agree a trade deal before December 2020. Now, if that trade deal is agreed, great, then a new relationship starts with the EU 2021. If that is not agreed, it's either extended or Britain has what's called a hard or a no deal exit, a no deal situation going forward with the EU. So that is negative for the pound. That's most likely to be positive for the pound, okay? That will be positive for the pound as well. So through this whole year, you thought Brexit was done. It's not done. It will be formally done, but the relationship between the EU and the UK is still to be worked out, and things are not simple because we've got the same issues. Now, usually trade deals to work out, they can take years. I think Canada took 6 years to work out their trade deal with the EU. So Britain trying to organise it in 12 months is seen as ambitious. And Canada, Britain wants to go down a Canada-style route. Boris Johnson has said that. So, maybe they can maybe cut and paste some of the Canada deal. That's always a possibility. But those with wiser heads are saying that a year to agree the deal is unrealistic. So an extension is the most likely outcome, or potentially leaving without a trade deal. So just to be aware of that dynamic. And this is, the more we go to a deal, that's pound positive. An extension is pound positive. A no deal is pound negative. So that is the three kind of main scenarios that are most likely going forward. Just like the US-China trade war, it's still rolling on, but it's just rolled back a little bit. And what I mean by that, the phase 1 trade deal has been signed and agreed, and we've been seeing some record closes in equity markets. US equity market has been making record closes day after day. It's been a really strong bull market for US equities. A lot of that is that relief on the phase 1 trade deal. That has surprised me. I was expecting potentially buy the rumor, sell the fact situation for equities, but nevertheless, that is what's happened. Just a quick reminder that the impact between US and China on the world, you have around 40% of the world's GDP comes from just US and China. So literally, where US and China go, the rest of the world follow. Okay, it's that kind of simple. So just to be aware of that strong dynamic. So phase 2 is now the focus in the US-China trade deal. If the phase 2 looks like getting sorted, the big issue the US have is intellectual property rights. If those intellectual property rights look like they could be solved, then that would be further positive, and we see some more risk on sentiment. That's just big picture stuff. We've seen some equity markets falling today, and we will get onto that for today's session. But in the big picture, there's been relief in the market since the signing of the US-China trade deal, which was last Wednesday, the 15th, when it was signed, and that was just before our last webinar. Although I wasn't doing a webinar because I was in CNBC Arabia speaking then, so that's why I wasn't here. So turning to your handout, let's start drilling into some present detail so we can start putting some of the fundamentals into practice of our trading, okay? So the first thing we're going to do is, turning to your handout, is look back. And what we're trying to do, we're trying to identify recent sentiment by reading up on the last 2 sessions of market activity, get the key market sentiment, and try to summarize that sentiment in a sentence or two. So as we look at the Asian equity, when I came to my desk in the European session, the first thing that really drew my attention was the fact that the Asian equity markets were considerably down. Okay, so we had the Hang Seng down to minus 2.81%, the Shanghai down minus 1.41%, and the Nikkei down minus 0.91%. So you put that all together, then the Asian indexes are down. You also had minus 0.19% on the S&P ASX200, which is the Australian index. So the Asian indices are all in the red, okay? Now, one little tip here. When equity markets are a percentage point up or down, that's when you want to pay attention, okay? So looking at the markets, and then once we had the UK cash open and the European cash open, look, the European equity markets are down, Asian equity markets are down, and then we had the S&P 500 futures and Dow Jones futures were down as well. Okay, Dow Jones futures aren't on this one, but they were down, and currently still are down. Dow futures are down minus 0.19%. So straight off, that tells us the market is in a risk-off mood. And the reason for this risk-off mood was due to the concerns over this coronavirus. I don't know if you've been following this at all, but it's a kind of SARS virus, if you remember that from going back in 2003, and it's breaking out. Now, originally it was thought not to be too many cases. However, this morning there was something like 234 cases. Now it's like there's 299 cases. So the market is very concerned that this coronavirus is going to break out even further. And importantly, the thing to realize is that this Chinese Lunar New Year is about to end. So obviously with a festival and a big holiday, people are traveling a lot. So the fear is that with this sudden increase in travel, you're going to get huge amounts of cross-infection. So that's why Asian equities were sharply down. There's a fear that this coronavirus, at this stage, it's not known exactly how serious the disease will be. I think something like 4 people have died. So that's just to give us a little bit of understanding. Now, what would we typically expect to see in a risk-off market? Well, we typically expect to see yen strength, Swiss franc strength, gold strength, and possibly US dollar strength. You have to remember that a US dollar is a currency that can be bought in risk-off markets, but it isn't always. You just remember, so I put that in brackets. And then we expect to see Australian dollar, New Zealand dollar, US oil, and Canadian dollar depreciate. And a good little handy tool that I use is the Nikkei. So if you look at the Nikkei here, right, you see the Nikkei is down minus 0.91%. And when the Nikkei is down, you tend to see the Japanese yen strengthening. Now, I'm just going to send something to you all. I'm going to send a website which gives you a link to like the major indices, the major commodities. So if you go to that website, teletrader.com, just sent it to you, there is free information for you. There may be a slight delay on the feed, but I had a check of it and I seem to remember it not being too bad. So just check that out. So use at your own risk, but it's a broadly pretty good tool as far as I can tell for seeing for seeing details like this, all the equity markets at a glance. Okay, so that is the situation that we had. So looking back, so what we want to do, the first thing we want to do is look at strong, weak currency for the European session. So bearing in mind that we're in a clear risk-off market, all the equity markets were heavily down. Remember, equity traders are very sensitive to risk. So when equity traders start selling their equities, we know that they're heightened in their risk environment. So that's why we see a risk-off mood coming back into the currency markets. So on that basis, what do we think will be a strong and weak currency for the European session? So when you come to your desk, 7 a.m. GMT, what currencies would you look at? Type it in the question panel, start telling me the currency pairs you would look at. Remember, we're always trying to trade a strong currency against a weak currency. That's the plan. What would you be looking at? Sammy, exactly. That's exactly the currency that I shorted this morning. Straight off the bat, well done. Just going to give other folks an opportunity. If you're attending, why don't you have a go? Which currency pair, based on a risk-off market, we're in a risk-off market, which currency pair or pairs or commodities would you think would be good for potential buying or selling? We've got one great answer. Okay. Yeah. I like it. I like it, Sammy. Another good one. Going to give folks 30 seconds and I'm going to go through Sammy's answer and we'll have a look at the charts. Yeah, Hashik, good man. Same as Sammy's. Okay, Sammy, Hashik, thank you very much. Gold stars for both of you. Very good. That's exactly right. So that's what we're expecting. Weak Australian dollar, strong Japanese yen. Now, this is what in a risk-off markets you tend to see yen or Swiss franc strength. Okay, so a strong market you would expect to see Japanese yen, or you could put Swiss franc. Yeah. And the weak markets we expect Australian dollar, New Zealand dollar, and potentially Canadian dollar. So Australian dollar or New Zealand dollar would have been excellent currency pairs to look at trading. So Australian dollar, Japanese yen shorts, New Zealand dollar, Swiss franc, New Zealand dollar, Japanese yen would have been excellent for shorts, because in a risk-off market, we would expect yen strength, Swiss franc strength, and we're expecting Australian dollar, New Zealand dollar weakness on risk-off tones. And as well, you see, we have the Australian fires, which are having a drag on the Australian economy. So that's just a further reason for Australian dollar, Japanese yen weakness. So once we've done that, what we want to do, we want to look at the charts. So we now go to our charts. So I would use a okay, so here we go, looking at the Australian dollar Japanese yen chart. So this morning, coming to our desks, hang on, let me just get this. That's it, okay. So this morning, coming to our desks. Now, where will we potentially look for shorts? So we have our bias, Australian dollar, Japanese yen to the downside. We now need to find an obvious place to look for short entries. So there's a couple of places we could look at. So looking at, right, this support point here would have been an excellent place to look for shorts. Yeah, at the 75.53. Then another potential area to look for shorts is this 200 exponential moving average and this 75.71 level. So look at 75.71 and looking here at this recent support level here. So looking at that, we would have potentially looked at shorts here at the 75.55, and we would also be looking for shorts here at the 75.70 level. Okay. So at both of these places, I would expect to find sellers. And where would I expect to find stops? I'd expect to find stops above this second most recent high. So I expect to find stops up there. Okay. So looking at that currency pair, that's where I'd expect to see that. Now let's look at New Zealand dollar, Japanese yen as well. See the same thing. Look, virtually the same scenario. Would have expected to find sellers here, here, and stops there. And we'll just check out New Zealand dollar, Swiss franc. Let's just have a little look on this daily chart. Let's have a sense of it. Okay, so you've got this double rejection of the 100 exponential moving average, and you've got a decent support resistance level up there. And if we drill down to the 15-minute chart, yeah, very similar to the Australian dollar, Japanese yen. So anywhere here, you expect to find sellers in this area with that horizontal level there, this horizontal level here, and above, and stops just above here. So that's what I'm expecting. So there will be potential short places for Australian dollar, Japanese yen, New Zealand dollar, Japanese yen, and New Zealand dollar, Swiss franc. So all of that would, in my view, be valid short trades for the session in the European. We'll get on to the US session in a minute. Now, What did we see in the European session this morning? We'll just quickly cover that. Just dragging it across here. Okay, so we saw some average earnings. Now, these average earnings were better than expected. Okay, the claimant count change was good, unemployment rate was steady. Average earnings was a slight improvement on the 3-month reading. Okay, so we saw some pound strength coming into the market. But what we're going to ask ourselves here is, does that fundamentally change the picture for the pound? And the answer is no. Okay, we've got Mark Carney speaking at 3 o'clock GMT. We have got the important PMI data out for the pound on Friday. Okay, this is going to be very key. The question mark I have over the average earnings is that if average earnings are up, and also this is pre kind of Brexit data, if the average earnings are up, then looking back to the retail sales of the pound, we see CPI was a miss the week before. We then also had retail sales were poor. I think it was on Friday. Yeah, see, retail sales were poor. So in other words, if wages are up, you'd expect to see that flowing through into retail sales being up. You expect to see consumption increase, but actually we see consumption decrease. This figure included the Black Friday November sales. So this tells you that the UK consumer, that those wages aren't necessarily coming through into consumption. So you're putting that all together, and there is skepticism over how much of a recovery this means. So looking at that, one potential swing trade that I'm looking at, again, and please remember, this is not trading advice, because trade situations, market environments can change every second. So you have to be flexible. But, or rather, should I say, so this is one interesting setup that I'm looking at on this pound strength, because what we see, we have this pound strength coming up. Now, that pound strength is approaching these highs up here. Okay, so is the pound going to keep rallying? If it does rally, it's got to break through these levels here, and then it's got to keep going up to those highs. But the retracement in the pound with the yen strength, is it going to be high enough to break through this 144.50 level? Okay, so one obvious potential area for a short is this region just up here. So just with current prices currently at the current market price, that could be an interesting place to short the market heading into the data points for Friday. Okay, so what you could see is, I'd expect to see some pound sellers on this, as they digest the data, and also Mark Carney is speaking. So what's Mark Carney going to say? If he says something bearish, then expect the pound to start selling off pretty quick. If he says something bullish, obviously then we might see that 144.50 level break. So there's risk. But if he isn't, and if he is bearish, then this level here looks a sensible place for shorts, and risk is potentially quite defined, just above that 144.60 level. So that's one potential swing trade that I'm looking at to try to hold in to Friday. You just don't know how many downside you're going to get, but this is based on the assumption that EU UK trade talks are going badly, the UK domestic picture is poor, the Bank of England members have been more dovish recently. So there's three kind of reasons that I can see for pound weakness. Yen strength, because we're in a risk-off market. So pound yen from these levels look quite attractive to my mind. But obviously, Carney could say something bullish and we could break up above there. But that's where I would expect near-term stop losses to be. So that's just an interesting trade that I'm potentially looking at going forward. Again, that's not trading advice. It's simply showing you the reasoning, and the logic is really what I'm trying to communicate to you guys, so you can see, how I go about making decisions, etc., etc. Okay, so that was that medium trade. Okay, bigger picture outlook. Okay, remembering just what SARS taught us in 2003. Now, I came across a very interesting infograph. This coronavirus that is spreading, even as we're speaking now, there's more cases being released, right? So in the SARS virus 2003, what we saw the Asian Pacific index, all the different Asian indices, they sold off quite rapidly. And what SARS taught us is that, first of all, you get a few cases, and then the cases rapidly progress. And this was just one instance of, towards the early days of SARS, this one gentleman who was at a hotel, sadly, who died, this gentleman here. What happened is that he was just on this floor, and these are all the people that got ill from the one patient on the same hotel floor. So you can see, wow, some of these viruses can spread very easily. You've been to a hotel, you wouldn't necessarily expect to catch an illness from someone like across the lobby in the hall. Look how far this virus actually went, and particularly these rooms here, look, they really got the brunt of the illness. So this is why the market's paying a lot of attention to the spreading of this coronavirus. The SARS virus taught us that equity markets get scared. You can imagine if there's a health outbreak, then that's really going to impact GDP. People won't be able to go to work. People will be fearful. People won't go out spending. So, it does really drag down economies, as well as the very sad health and personal tragedies that are caught up in that as well. So that's why the market looks at it. So this is the Nikkei. We saw that strong, heavy selling. So I'm expecting sellers at market at pullbacks and it stops. Also remember that the equity markets have been quite strongly bid. So could this be a reason for a kind of a turning point? Now, it's never a good idea to pick near-term tops, but I would expect, as long as this coronavirus keeps on, then I expect like the Nikkei and the Shanghai composite to keep falling, and the Hang Seng. Okay, so I expect sellers at pullbacks on any of those indexes, the Nikkei, the Hang Seng, the Shanghai. That's what I would expect. Now, obviously, look for what the World Health Organization are saying. If they come out and say, it's okay, it's not too bad, the virus is not much more than a common cold, then okay, people aren't going to be that upsets me like getting the flu. But if more people die, and 4 people have died, which in my book that's already 4 people too many. But look for how widely it spreads, how many more cases we get, and how serious they are. And that will impact equity markets. So just watch out for that, because the SARS virus kind of it sped up, and then all of a sudden there's loads of cases coming out. I'm sensing today a bit of a speeding up in how many people are getting this virus. So let's have a quick look at the equity market, okay, and we'll see how this trot ties into the ASX200. But just before we look at that, I just want to have let's have a quick snapshot at the equity market. Hang on, I'm just going to get a better. Okay, here we go. All right, that's better. Thank you for bearing with me. Just going over to the Bloomberg terminal. Right, so let's take a screenshot. Here we go. So what we're looking at here is we can see S&P 500 futures are down. We can see that the European indices are down. We haven't got the cash open yet of the US. That's not due for another hour or so. And we've got, we know that the Asian indexes are closed, but the futures are down. So the futures market, S&P 500 futures market is down. Just going to go over to the Dow futures market. Yeah, Dow futures is down minus 0.20% now at 29,220. So, okay, so what that's telling us is that the equity markets are still concerned about this coronavirus. So that means the same outlook that we've seen earlier for this risk-off market is valid for the US session. So this outlook is exactly the same outlook that I expect now for the US session. So those retracements up in Australian dollar, Japanese yen, Australian dollar, Swiss franc are now in potential shorting areas. Okay, so that's what the equity markets are telling us. Now, one interesting question to look at is what might cause the Australian ASX200 to pull back under 7,000. So, right, let's just have a quick look at this equity market. Now, this is the Australian index. And so for those of you who do trade Australian index, this is the, on TradeView, this is the marker, XJO, okay, which is the ASX200. So just having a little look at it, what do we see? So what we see that this 7,000 level has been pulled out of strongly. Okay, looking on the daily chart, we see, look, that was a strong breakout. We have the China deal being sold, China deal being signed. Bang, 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 bang. We've seen strong bullish market, as we've seen in quite a few different equity markets. Now we're seeing some of that pullback. And that pullback has been on this coronavirus concern. So, potentially, again, this isn't trading advice, but potentially that looking at the Australian economy, we would expect a pullback now in the ASX 200. And these are the reasons you might expect a pullback. If you notice, the share value, okay, tends to track the S&P 200, okay? So just have a look at that, and can you see how the white line tracks the blue line? Okay, you see that? Now this is the earnings per share, the blue line, okay? And that's calculated by dividing a company's profit by its shares. So that basically, the EPS lets you know how profitable the company is, right? And unsurprisingly, the EPS tends to track the ASX 200 price. Now you can see, look, there's a divergence that's appeared here, okay? So we have the EPS going down, and yet we had the S&P going up, okay? And normally, look, from 2000, you can see that there is, so a potential for either the EPS to catch up with the S&P 200 or for the S&P 200 to move in line with the earnings per share ratio. So that's just something to be aware of, because there's a discrepancy. I think that's obvious. You can see that. So if you look at the Australian economy, one of the problems we've got is the US-China truce going to turn around that EPS figure? And the answer is no, it's not. So we're not expecting the US-China phase one trade deal to affect that earnings per share for Australian companies. The profit turnover has kind of cut back in the middle of last year. You can see, look, middle of last year, we see earnings are down from that point of time. Now, the Reserve Bank of Australia cut interest rates to 0.75%. And it's 50-50 now at the moment whether they'll cut interest rates again. Now, we have a Westpac consumer confidence decision out later tonight, about 11 o'clock. And remember, the other big factor that's impacting Australia is the Australian bushfires. Now, unfortunately, these bushfires are expected to impact the Australian economy, expected to impact jobs and consumption, and they're going to drag down Australian equities. So when you put together chance of a rate cut 50-50, earnings per share are diverging away from ASX200, would we expect to see a pullback in this equity market? And now we have a risk-off tone given the spreading coronavirus. So potentially, I wouldn't be surprised to see is a pullback in that equity market. Now let's just look for some. So potentially, the first support area will be the 7020, and then a major support area will be this level here, the 6880, and I think near-term risk will be above the 7187 level, just above that R3 point. Okay, so that's potentially where you'd expect to see that would be a potential place for stops. Now, this obviously isn't trading advice, but those are the factors. So if we get those factors really accelerating and we start to see the ASX200 really selling off for the reasons I've outlined and they get worse, then you could expect to sell retracements. Okay, so I'm just going to leave that with you. Keep an eye on that market, ASX200. It's one to watch and it's very interesting. I will also send you a link to an article I wrote on that, okay? And that link is now sent to you all. So you can have a little look at some of the reasonings, have a little look at this chart. It'll be there saved for you, okay? So sentiment for the US session, we've already seen strong Japanese yen and Swiss franc, weak Australian dollar, New Zealand dollar, and potentially CAD, okay? So we want to pair those up with each other. That would be the sentiment for the US session. Now, looking at the charts, we did that earlier. Just do the same for the US session. Can leave you to do that. If you've got your own technical system, use your own technical system. Just pick the currencies which are most likely to be strong or weak. Now, looking forward, we've got manufacturing sales for the CAD. And 11 o'clock, we've got the Westpac Consumer Sentiment from Australia. And don't forget, at 3 o'clock, we have Mark Carney. So that could be one interesting one to look for with Japanese yen. Okay, so bearish comments from Mark Carney, and we should see some retracements from the wage growth. So what trades are you looking at, guys? This is your moment. If you've got a trade you're looking at, something that you're thinking of, let me know now, and it'd be good for me to go through and see what you're thinking. Any trades you want to comment on or anything like that, very happy. Okay, what about DAX? Let's have a look. Okay, let's have a look at the DAX. DAX, you can see it is in that. Let's just check, got the right. Yeah, that's it. Okay, yeah, we got the DAX. Okay, the DAX, Hashik, it's in that. It's in a strong bullish mood. We can see we're approaching these recent highs, 13,600, like other equity markets, making record highs. We had the German's consumer confidence, didn't we? And we got a very, look at that, a big bullish outside bar. So technically, that's looking like it's poised to break out from a technical perspective. From a fundamental perspective, I'm not so sure, Hashik, what the situation is for the German index. So only broadly speaking, we got indexes broadly being weighed down by negative risk sentiment. So if like the coronavirus gets worse and you know, we see the S&P 500 down and S&P 500 futures down, and the Nikkei is down tomorrow, you know, tonight, then I would expect, you know, some pullbacks in the DAX. But aside from that, what are you looking at, Hashik? What's your thinking on it? Yeah. You know, on the plus side, with if you're a committed seller, okay, you can see it's that looking potentially a top, aren't you? So an obvious stop on that, like a swing trade, would be above that R2 resistance level at 13769, or potentially above recent highs 1360 would make sense. You might get a very tight stop in there, and then the other option is if price does move up to the R2 level, you could always enter another short up there. So if you're committed to the downside, the only downside, and I will say this, and I'm conscious that, you know, this is something that I'm taking risk on, which is that the equity markets have been strongly bought. So there's strong buying power. Now, my bias is I don't think that buying is justified. But there's an old saying, isn't it? The market can remain irrational longer than you can remain solvent. So it's fine to take a bit of a speculation on this. And if I was speculating on this market, that would be the way I would do it. And stop above the R2 makes most sense to me, because you're giving yourself some room to breathe. And then you've got first target 13214-ish, and then second target 1300. So that's what I would take on that. But I said the DAX is not really an index that I've got. All I know is that, you know, German confidence was a little bit better today, and you'd expect a little bit of German recovery from the US-China phase 1 trade deal on optimism that will improve the German economy. Actually, yeah, sorry I can't be more helpful on that, but that was just, you know, what I could be helpful on. But good to know you're trading in the indexes. One of the, you know, as an aside, I know not everyone's mentioned, but like sometimes it can be really helpful having different markets to trade. So in my private account, you know, I made about 10% for the year so far just on trading gold. And, you know, that's not a currency. So having a commodity, or maybe having a, you know, different index or interest rates or different markets, can be helpful when there's nothing particularly much going on in maybe currency markets. Obviously, currency markets have come alive a little bit now, but, you know, last year the volatility was pretty low in the currency markets, and that's hard. Yeah, Pat Salvatore, pound yen. Well, that's, as I said, that's a trade that I like, pound yen, and I do like that. I do like that potential short. Obviously, Mark Carney is speaking, so that would be near-term risk. But assuming Mark Carney is, you know, more bearish for the pound, I think that offers good value for money, with a stop above recent highs 144.66, and that's what I'm expecting sellers to come in. Now, where would I expect? I'm expecting stops above this level here. So if price goes up above here, then, you know, I'm expecting stops to be broken. And some people might be taking a longer view, and with stops above this level up here, 148.51. The thing is, I think if price moved up there, maybe I'd be interested in the short, but or else you could have quite a large stop for not so much of a reward. So this recent high here, look on the daily chart, that looks good value to me for a potential short. And obviously the PMI numbers on Friday will be important. So I wouldn't be surprised to see some of this yen strength coming in, and the pound fading some of that positive sentiment on the wage growth, which is what's been boosting the pound today. So I think broader picture, I favour selling the pound on rallies. Yen strong today because Salvatore, we're seeing risk off flows. Pound medium term is weak, even though it's strong today. So medium term, that is making sense for a pound yen short. I'm expecting sellers at this level, expecting stops at that level. So that's my view, Salvatore. Gold. For me, gold, this big bull run that came into January, I mean, my gold positioning, I've shared this before, I bought at 1480 and I've sold at 1572, so I took a big chunk of that leg. Gold at the moment is like, this is slightly strange price action because the market is risk off, but yet gold is being sold. So in my mind, I'm just staying aside because it doesn't quite make sense. Usually in a risk-off market, you expect gold buyers. But look, we're in a risk-off market and you've got gold sellers, okay? We have seen some US dollar strength. The US dollar index had been bought up into the 97.70 region, just looking at my dollar index chart now, and it's selling off at the moment. So gold isn't making sense to me today, Hashik. I'd expect to find buyers on a risk-off market, but I'm seeing sellers. So that just says hold fire. From a technical perspective, you can see that gold is at a key technical area, 1550. So that is a kind of a key area where you potentially expect longs to re-engage. But like that run that was expected, this was expected, because, you know, I think I've shared this with you before. Let's see if I've got the I may have got the slides. I keep some useful slides down at the bottom of my presentation. I think I've got rid of it now. Let's see. Yeah, I've got rid of it. Annoying. But basically, for every month of January for the last 6 years, gold has been bought. So that gold rally was expected, and I flagged it up early December. I bought in sort of mid-December in anticipation of January and just took a big chunk out of that. So gold now, in a sentence, Hashik, if we get a strong risk-off market, gold is back in play. But the fact that today we're seeing gold sell off when typically I expect it to be bought in this market is just raising a question mark. And there's a wider question that last week we saw Swiss franc weakness and Japanese yen strength. Now, normally those two are bought or sold together. So there's just a few question marks going on in my mind. And obviously this bull market hasn't quite made sense to me. So I think the market, if you zoom out, is really looking for a big picture to focus in on. Is it going to be EU-UK trade? Is it going to be US-EU trade? What is it going to be? And I think we haven't quite seen what that is. So I'm just definitely look at it. Look, this is a key level, this 1550 level. And we've got this R1 level here at the same place, 1540 odd. So there's definitely near-term support there. But for now, I'm just leaving aside. Hashik, what are you? Are you a buyer or a seller? Yeah, it is strange. Yeah, euro, US dollar. So we're seeing some euro, US dollar strength today because we're seeing some dollar index weakness. And remember, the dollar index is also known as the anti-euro index. So this is doing exactly opposite to what the dollar index is doing. So if you've got the euro going up, you've got dollar index going down. Are you a buyer or a seller on the euro US dollar, Sammy? You buying or selling it? Just while you're you sold. Now, depending on where you sold, you see, broadly speaking, we've got the ECB meeting out this week, and the ECB have got a bearish bias. So the euro there's a bearish outlook for the euro on the big picture. Okay, at the moment with the US dollar index weakening, then we see the euro strengthening because the euro is has a disproportionate weighting in the US dollar index. So that's why you see the US dollar index and the euro US dollar pair moving like opposite to each other. What level did you sell at, Sammy? Now we've got a big option expiry. We've got some big option expiries on the euro US dollar today. Just going to have a little look where they are. Yeah, okay. Just wait. Okay, 1.108, 1.108. Yeah, so you're selling right. Oh, Sammy, right at the lows. Okay, so as a general, you never want to sell at the lows, and you can see that the difficulty you've got here is you're selling into this. Okay, that's maybe not too bad. You've got a little, a breakout of that trend line potentially there. So okay, that's not as bad as I thought. That's you got a break of the trend. At the 1.1140 level today, here we've got a 1.5 billion option level. Okay, so at 1140, so that tends to act as a magnet for price. We're going to have to see what happens with the risk sentiment. Risk sentiment gets worse. Then I expect US dollar strength and the euro to sell off. Bigger picture, I do favour selling the euro on rallies. Whether that's you generally want to do it on retracements, you kind of feel like you've got right in at the bottom there, Sammy. But a key risk event for you is going to be the ECB meeting coming up this week. So let's have a look. Where is it? So you got the ECB meeting on Thursday, 12:45, and the press conference afterwards at 1:30. So that's going to be a key issue for you there. So just watch out for that. But broadly speaking, I do favour selling the euro on retracements. And for those of you who aren't around or aren't in the trade, that 1.1140.50 level has a strong option expiry. So expect some price action movements there. Okay, guys, that's all the questions that we've got. I'm looking forward to next week. I'll be here, same time, same place. Don't forget Mondays, 12:30, and Tuesdays. It's been really good to hear from you. Let me know how today's gone next week, and maybe we can look at some of the trades you've taken or haven't taken, and do a description of them. It's been good to have you, and thank you very much for attending. Yasser, good to have you. Yusuf, Sammy, Van, great to have you guys as always. Salvatore, thank you. Thank you, Hashik and Lolu. Thank you for your engagement, Hashik. Hamed, Farah, Aaron, good to have you back, and Ifam. Take care now, guys, and I wish you all the very best for the coming week. Thanks now. Bye.